is what we've seen the last few days. But we've had a fair share of entertainment a fortnight ago, so we're okay with borrowing for a while. Mitessh Thakkar and Sudarshan Sukhani join in now to tell us how to approach the day's trade. Gentlemen, morning to both of you. Sudarshan, is there any reason for this market to break out of this range? And what are the levels that you're watching out for today?
Yeah, good morning. See, we have a trading range that's now clear and visible. Any reason, I can't say, Sonia, markets can find a reason to do something, but the probability of a break below the range is much stronger for me, which means sooner or later 16,800 could be taken out on the downside. That doesn't mean we can't break on the upside. It's just that as of now, the higher probability is a lower breakdown. Now, trading inside a trading range is always difficult, and usually, prices move randomly inside the range. I would suggest the same, give traders the same suggestion as yesterday. Try to avoid trading as much as possible. If you have to, then you buy on a sharp correction with a stop at 16,900. But if you can avoid it, nothing like it.
All right. Okay, Sudarshan, thanks for that. Mitessh, what about you?
Yeah. Good morning, Nigel. So we've been advocating that 17,100 and then 17,250, 280 is the zone where the markets will find supply, and 16,850, 16,750 are the two levels which are support on the downside. Now, having said that, we have also been maintaining that this will be choppy but yet a ranged market with eventually a higher risk of us breaking on the downside. So I think that view still remains. Therefore, it becomes an ideal sell and rallies market, as Anuj was also highlighting. Close at about 17,100, 150, very good levels to start shorting on the index. If you get to about 17,250, and that is a big if, then I think we can do aggressive shorting in futures as well. But otherwise, we'll want to buy put options as we get some kind of a bounce back closer to about 17,100, 150 zones. And broadly, I think, once we start breaking 16,850, then I think we can look at about 16,500, 450 at least as the minimum target.
Okay, gentlemen, good morning. Mitessh, what about your trading calls?
Morning, Prashant. I have two buys and two sells. Bandhan Bank on a mild pullback today can be sold around 199, 200. Keep a stop at 205. Look for targets of around 190 here. Similarly, GNFC on any pullback, let's say 503, 505 is the good range to go short here. Keep a stop at 519. Look for targets of 575. So these are the two sell calls. On the buying side is Godrej Consumer. Keep a stop at 949. Look for targets of 988. And Dalmia Bharat is a buy with a stop just below 1850 for targets of 1915.
Okay, thanks for that. Sudarshan, how about you?
Well, DLF is an intraday short. The stock had big declines for the last 2 days. Something is going on there. So take an intraday short with a stop above 357. Dabur is a positional buy. See, there are no intraday trades for me in this very choppy market, but there are positional buying opportunities. And what's the harm? Traders should use this dip to buy good quality stocks. So Dabur is a positional buy. Keep a tight stop under 534. Last week also I had said that FMCG stocks are looking up. Now we don't know how much they will go, but it's worth going in if you have a medium-term view. Indigo is another intraday short sell. The stock was in a trading range and yesterday it broke down from that trading range. Keep a stop above 1826. And finally, Ultratech Cement, another positional buy. If you buy these good quality stocks now, 1 year later, you will be much happier. Buy with a stop under 7,300.
All right. Gentlemen, thanks very much. We'll get back to you shortly with more in a bit from now. 5 minutes to go for the pre-open session. We'll take a very quick break. We come back with the pre-open. We also have Ankur Rudra of JP Morgan to discuss the latest trends in the telecom sector. Stay tuned. That conversation coming up next.